I guess you couldn't hear me for the past couple minutes. But I was saying good morning, good evening, wherever you are. Welcome into the live stream. I hope you can hear me now. It has been a pretty choppy past couple of days in the market, and on Monday, I told everybody that we would have to definitely be careful this week, mainly because it's OPEX week, and at the same time, we had those CPI readings. We have tried to break out of this range a couple of times now. Just a quick little check. Can you guys hear me indeed? Can you hear me? I apologize if my voice is a little raspy. I'm still recovering from a little bit of a sore throat. Okay, great. So yeah, it's just been a little tough this week. Now, early on Monday, I mentioned that I wouldn't be trading much this week, mainly because I already knew that during OPEX week, there's going to be a lot of price manipulation. Not only that, dealers that are constantly going to be, pinning their exposure off to other people and then taking that exposure back on when conditions are right. This all typically leads to rolling of contracts and a bunch of other things during this week. We had CPI data that came out very in line with expectations on Tuesday, and that set the market off into a little bit of a predicament where it was ranging sideways for a little bit. And then on Friday, the PPI data came out hotter than usual, which is actually, you know, the main reason why the market's getting a little between its tails right now. Remember, higher PPI means higher prices for longer. Producers often pass the price on to the consumer, or rather also other parts of the market. So we'll likely see prices be higher for longer, and if that's the case, then we're also likely to see interest rates stay higher for longer. Now, I spoke about this for about 2 weeks ago, where we looked at the bond market already pricing in a lot of this information. And rightfully so, again, the bond market has been pricing in a lot of the rate hikes that we have been talking about. And I keep mentioning over and over again, when all is in doubt, make sure that you're looking at the bond market and you understand it deeply. Because if you don't understand the bond market deeply, then you're not going to be able to understand equities, because this is where debt comes from. And this is where a lot of the credit that you see that is required in markets are created. Not only that, these are the instruments, rather specifically the 10-year, is the instrument in which the federal funds rate is controlled. So if you don't understand how the bond market works, you should probably get somebody to explain that to you, or watch a very in-depth video about this. Another alternative, obviously, is to take the EGA version 3.0 mentorship course, which we have live now as well. Now, the dollar index also broke out of this significant downtrend here and retested its trend breakout at 103.63. This was a good signal for the continued upside. I mentioned yesterday that we would likely continue up into 104.63. Now that we got rejected there pre-market, we are likely to see a bounce on equities in the short term. So this 4060 still didn't really break down. Now, if we don't break down aggressively within the first like 1 to 2 hours of the market today, then we are likely going to bounce here again to backtest 4100, basically 4090 to 4100, this range right here. So this is going to be the key range that we'll be looking to backtest this AM. If we can backtest this AM, this range, we will possibly be able to reject this range and go further down from here. If we backtest this range and we start breaking above it, then we're likely to see a retest of the 4150s and 4180s at the back of this. So it really is going to kind of boil down to where this market wants to take price action in this session. Remember, Monday is a holiday, so the market's going to be closed. So there's going to be a long weekend. On the NASDAQ, we have a similar kind of a situation. We will be looking for a backtest of around the, let's see here, 12,480 all the way to 12,400 to 12,480, basically. So backtest of that level will be important for us to see the further downside here. Now, I know a lot of you are seeing all the heads and shoulders, knees and toes, bees and wax, mice and snake. I don't know what other patterns that you guys love to develop on your own, but I'm just here to give you a reminder that all your patterns don't mean shit unless the market's moving in a very orderly fashion, which it isn't. So whatever formation that you're seeing, try to avoid your confirmation bias and ask yourself why it's likely not to happen rather than why it's likely to happen. Because if you're a hunter and you go into the forest and you are wanting to kill bunnies, the only thing you're going to see is bunny ears. So the best way to avoid that is to ask yourself, what would the bunny actually not look like, right? So that way you remove the bias. At the same time, IWM, which had broken out very, very aggressively, is now showing signs of a possible pullback. I mentioned about 2 days ago that this might have some legs down to 187 or so. And you know, it's been in a very big consolidation phase here. If today the market does fall further and gets, you know, a little below around 190, I think, you know, it would be safe to play this $3 down move here. It might happen pretty quickly on this because small caps have been all of the rave lately. So I would advise if the market really does fall, this is one of the ones you want to catch right away instead of spending your time trying to figure out what exactly you should be taking or should not be taking. IWM is one of the ones that you can really easily capitalize on. Small mid caps tend to really perform poorly based on market environments where greed is exceeded. Obviously, the VIX here pumping back up into, let's see here, pre-market around 3.4%. Nothing crazy just yet. As I mentioned before, 24 or 26 or 29, these are the three levels at which we get slightly more apprehensive about what's going on. As of right now, we haven't seen a push up into these levels, so we wouldn't want to really speculate on these just yet. Bond market, I've mentioned a little bit about what the bond market is expecting here, so let's go through it a little bit more for those people who don't understand how things work in equity markets or in the market in general. You have to understand that all of these markets are interconnected in some way or another, and the bond market is the way in which capital flows through the system. Remember that when the Fed wants to give or take money from the system, they have to do this through the sale of bonds. Okay, they have to do this through the sale of bonds. And so if they do this through the sale of bonds, the way they do this is through the federal open market operations, and that involves buying and selling treasuries. So the price at which the market prices treasuries, and you should have all of these treasuries in there. By the way, if you want this list, I can send it to you guys as well. I'm gonna put it into the chat right now so that you can have this list on your trading view. You don't need to go look for everything, but these are all the yields of the bonds, right? And we know that in a normal economy, the yield curve looks something like this, right? Where the short-term bondholders command the lowest yields, and then we get a curve that's kind of going up like that. And in a normal bond market, the short-term bondholders command the least yield, and the long-term bondholders command the most yield. So this is percentage yield, right? And this is the maturity. Oh, sorry, this is the maturity. This is the percentage yield. My bad. This is the maturity, right? So right now what we're seeing is that short-term bond, first of all, the yield curve is slightly inverted, so this is instead what we're seeing, and so the short-term bondholders are commanding the higher percentage yields, which is your 1 month, 3 months, right? Look at the yields, right? You can see the ones that are commanding the highest yields are the 6 months and the 1 year. Because why? That's the timing in which the market's the most uncertain about, right? So then after that, you can see it starts to kind of wane off a little bit, right? So you can see this is a peak here, and then you have like a little bit of this, and then you have a little bit of that, right? So that's kind of what you're seeing here, right? This is what the bond curve is right now. And so you can see that the 1 year, the 1 month, 2 months, 3 months, 6 months, 1 year, 2 year, 3 year, 5 year, they are all bigger in yield than the 30 year, the 20 year, and the 10 year. Now this is a real problem because obviously the long-term bondholders are more susceptible to erosion of their returns. And what this is telling you is that people are commanding higher yields in the short term because they are unsure of the economic activity, or rather bondholders are. And because of this, this gives us a signal that they're expecting more. They're expecting higher yield, they're commanding higher yields right now. That means they're expecting those yields to erode away further. And if they're eroding yields away further, that means real yields are going to fall. And that only happens through the FOMC rate decision. So the bond market is signaling that they think that the Fed is going to have to keep yields higher than usual for a longer period of time. That's what's happening here. Now, the funny thing is the market doesn't... The market has been kind of just ahead of itself, right? I've been talking about this during the newsletters. I've been talking about this during all of the live streams, and I've been telling you guys that the market's a little out of above itself here. CPI came out just soft for like a couple of times, and the market decided to go wee, right, and then wee and wee, right, and now the market's starting to realize, oh no, right, like, oh no, we can't go higher, right? We don't know if this is gonna work out. Like, we don't have CPI in the bag. It's not exactly perfect. We're not in a downtrend, right? So now the things that people are starting to get a little helter-skelter, and the market has successfully, trapped everyone with greed. This is where there likely comes some kind of a pullback. In fact, I don't think we're done trapping just yet. I think that we'll get a little bit of a pullback more to the upside, trap a few more people, and then ultimately fall. So you need to understand how these markets are interconnected. I hope that was somewhat helpful to you guys as a refresher, at least. Now, obviously, there's more to this than understanding what's going on with equities and bonds. But in a nutshell, that's the best way for me to summarize it for you. Now, off the back of this, you have the dollar that's kind of broken out and is kind of moving into a higher level here. That also affects your commodities. So oil and gas, gold, right? Those were easy trades to take. I'm not sure why the rest of the... okay, personally for me, I had already a gold short, but then I closed it out early. But I'm not sure why people are so busy looking at things like Tesla and Nvidia when there was a lot easier money to be made on the other side here. Another sector that I'm looking at amongst all of this is going to be financials. And so if I can get a nice move down below $36, I will be short financials once again. I was short financials once before, and now I'll be looking to go short financials again. So, yep, that's all I have for you guys today in terms of just the pre-market update. I'm sorry, but this week has been a little bit rough for me. And you guys know how it is. Sometimes shit happens in life. So I hope that you guys, at least got a little bit out of this one. Monday's gonna be a stock market holiday, but what will happen is you'll be receiving a newsletter this weekend, and then also, do you guys want me to do a pre-market update on Monday? Like, I can do one, maybe if you want, I can do it at a different time. But then again, I feel like many of you wouldn't be awake at that time. What do you guys think? Should I hold it on Tuesday instead? What do you guys want for next week? You want me to hold it on Tuesday, Wednesday, Friday? Alright, that sounds good. Alright, we'll do it on Tuesday then. Yeah, we'll do it on Tuesday. That's cool. Also, for those of you that have not signed up for 14 days free trial on our Discord, that's available now. Just a reminder. And as always, if you haven't checked out our courses, lincolnbunker.com, check it out. New course just launched. In my opinion, I've got a lot of good feedback from it. In fact, a student just messaged me this morning telling me that they like a specific module, and that the live trading sessions are helping them a lot. So I'm really happy that these small strides that they take towards their own journey is giving them the returns that they see. And that's all what this is about. It's about helping others on their journey, because everybody's journey is different. And remember, I'm never going to tell you guys that trading is an easy profession, or this is where a lot of money is made, because in reality, everybody has to go through their own path, and you're going to find it. And the only thing that I can help you to do is get you there faster. That's my job. My job is to get you there faster. So I know after pretty much interfacing with 1,000 over students now, I have a pretty good idea on where the problem might be when you interact with me. So even if even if you don't have the money to take the course, you should reach out to me on Instagram. I always reply to DMs. And even if you need help with anything else in general, reach out. You don't know how I can help. And I'm not the sort of person to shy away from somebody who's going through the thick of it. So I appreciate you guys taking the time out to be here. Once again, hit that subscribe, hit the like, smash the like button. Sorry, my voice is a little bad today. I'm not really that high energy, mainly because I'm having a sore throat. So I'll be back hopefully in better spirits on Tuesday. So I'll see you guys on Tuesday. and I'm gonna jump on the Discord to trade live with the team right now. All right, guys, have a good one. Take care. Peace.